Market Debate powered by Investonomics, an initiative by ICICI Direct. Joining me today is Mr. Vivek Mavani, owner Vivek Mavani Financial Services, and Mr. Vishal B. Malkan, founder Malkans Training Institute. Welcome Vivek and welcome Vishal to the show.
Thank you.
My first question is for Vivek. Vivek, we are in a strong up cycle since March 2020. We have seen Nifty and Sensex surging, with Sensex now touching 60,000 mark. Where are we in the cycle right now? Is the meaningful correction overdue?
Well, to answer your first question, where are we in the cycle? We are clearly in the phase of euphoria. I mean, where all kinds of stocks, including the very low quality stocks, also participating stocks which have not participated or not had given meaningful returns in the last several years, also participating and moving up where even fundamentals don't justify. So we are clearly in a phase of euphoria. Is the correction around the corner? Well, anybody's guess is as good, and I'm no different. People have been calling for a correction for the last several months, but obviously market seems to be fooling everybody and, or rather proving everybody wrong. So I'm not going to stick my neck out. The key thing is because of the euphoria, one should continue to stay with good quality stocks and not really go down the quality curve in terms of moving to inferior quality stocks. That is what is important. So correction or no correction, good quality stocks will always help an investor be in good stead rather than low quality stocks.
Vishal, what is your view on Nifty? Because we saw 17,900 level on Nifty. And there is no correction, deep correction, maximum 5% correction that we saw in last couple of months for Nifty. What do charts suggest?
Yes, the charts are suggesting that, of course, we are into a strong bull market, and generally the bull market lasts for around 3 to 4 years as per the history. But of course, in every bull market, there will be a correction. And I think the way it has moved around 18,000 levels, where I think here there are some patterns which are there on daily charts and weekly charts, which are suggesting that 5% plus minus, there is kind of a strong resistance and kind of a distribution pattern which we can see. And if not a big correction, there might be a time correction where Nifty can go into sideways market for the next few weeks, and then we can have another bull run.
Vivek, how are you strategizing your moves in the current scenario as market trades at all time?
Well, the key thing is continue to stay invested at higher levels. Maybe it doesn't harm an investor or a trader to take some profits off the table from time to time. So in terms of about 15-20% liquidity is something that we are working with right now, and probably on the higher side go up to 25% if this phase were to last for another few weeks. But I certainly don't see ourselves or any of our clients moving to a scenario of more than 25% liquidity. So you ride out so long as it lasts. I mean, one is not really expected to be timing accurately. So you stay invested in good quality stocks and see the portfolio rise every day or every week.
Vishal, now that banking sector has started performing, there was a phase when we saw PSU banks doing well, but then we had a consolidation happening in the entire banking space. Private did not perform. But now again, the private sector banks have started performing with your HDFC and your Kotak Mahindra Bank seeing good momentum. So anything that you're liking on the charts as far as the banks are concerned? And what is the levels that you would foresee for Bank Nifty in coming times?
Okay, so as per the charts, in terms of private banking sector, I guess the best pick would for me would be ICICI Bank, continuously making higher tops and higher bottom weekly as well as monthly charts. And I think looking at the patterns and the levels, look at around 800 plus target in the next 3 to 6 months.
Anything you like in the that's the bank, ICICI Bank, you like in the private banking space, right?
Yes.
And anything you like in the PSU space?
I like a contra trade. I would like to accumulate PNB, Punjab National Bank, which is showing good consolidation and good volume at the lower levels, and there is nothing much to lose there as far as the levels are concerned. 33, 34 is a good support. On the higher side, 43, 44 is a resistance. But if I look at a very long term, the way the stock is performing, and especially in terms of volume, I think it could be a good stock for at least a target of 100 for at least 1 year.
Okay, Vivek, what is that suggests that financial space is out of the woods? Because now we are talking about NPAs easing out, your demand for credit going up in coming times. So, how are you placed as far as the financial sector is concerned?
As far as financial space is concerned, yeah, you rightly said that hopefully we are out of the woods as far as the NPA cycle was concerned, and I think the worst has already been priced in, worst has already been provisioned by banks, whether it's the PSU banks or the private banks. From here on, what is important in terms of growth to kick in is the credit cycle has to pick up, and which is still not. I mean, your credit growth is still in single digits. Typically, credit growth in the country should be at least double the GDP growth, and here the credit growth and GDP growth is probably at is more or less even. So that is where the big expectation is, that the corporate capex, when it does pick up, so it is linked to the corporate capex. I mean, there is only so far that your retail growth in terms of home loans and personal loans can take the growth as far as banking sector is concerned. Eventually, it's the corporate capital expenditure and corporate credit growth which has to do the heavy lifting as far as the growth in the banking sector is concerned. And all expectations are that it's likely to pick up in the next couple of quarters. I would agree with Vishal on ICICI Bank as being a very, I would say, interesting pick. But I would be more on the side of PSU banks, which have really got battered in the last 10 years. Not last 10 years, they've hardly had any returns, barring the last 1 year from the low levels. But if you look at 10-year perspective, I mean, probably most of them are still negative, or a 5-year perspective, most of them are still negative. And even from these levels, I think PSU banks, especially the SBI, Bank of Baroda, etc., the tier 1 PSU banks continue to hold promise.
Vishal, as far as the real estate sector is concerned, I mean, that is a sector which is booming right now. And for last 6 months, we have seen excess of 50% returns in real estate. I mean, you name the company, Godrej Properties, Brigade, DLF, they're all up. They're up and zooming. What do you like in the real estate space at current levels? Do you expect the momentum that we are seeing in the real estate sector to continue?
Yes, I guess real estate is in momentum, and in fact, on the start of this month, I had also given a same recommendation to all my students that sector for the month is real estate, and September has turned out well. And then the best pick would be DLF and GMR Infra. And GMR Infra is showing a good monthly pattern, and I think there is a lot of potential, and we can look at higher targets of around 60, 65 in the next few months. Whereas DLF can be a good stock with some volatility up and down. There can be some retracements also, but overall it has broken out of its long consolidation of last 10, 12 years. And I think targets of 500 is not ruled out in the next few months.
Vivek, are you positive on the real estate sector?
Well, selectively, yes, but I'm only cautious about very sharp moves in the better quality real estate players, especially the Godrej Properties. One of the companies I look at which has not moved up as much is Mahindra Lifespaces in this. So that is something that I'll bet on from a medium to longer term perspective. Short term, really, I am little lost as far as real estate cycle is concerned, because we continue to hear of oversupply, and whatever demand has happened is largely being due to stimulation by the state governments in terms of lower stamp duties and obviously lower interest rates on home loans. Now, how long are both going to continue? I'm not too sure. So if one were to look at the factors that assuming interest rates were to rise from here and assuming state governments were to reverse the cuts on stamp duty anytime in the next few months, then where does the cycle in the real estate really be? So keeping that factor in mind, I think Mahindra Lifespaces is probably better placed in that sense.
Vishal, what do you like in the mid-cap space? I mean, mid-cap space has been in momentum. It has broadly, if we see last 1.5 years, it has outperformed benchmarks with now a bit of consolidation that we are seeing in both the mid-cap and the small-cap space. Do you like anything in these spaces, and which are the companies that you would like on the charts?
I guess the choices is wide. Like there are so many stocks which are breaking out of their long-term patterns, and that's why we call it the bull market. But it's very difficult to pinpoint few. But the way we are looking at our portfolio, I think BEL Bharat Electronics is one stock which is looking very promising on the charts. iBull Housing Finance, again from the real estate kind of finance stocks, which is looking very good at on the charts. So a couple of them, and there is another few of them on Nucleus Software. There is Gati. All this real estate stock, all these mid cap stocks are looking very, very good.
Preferably, I mean, it's a large choice. I mean, you have 4,000 to 5,000 listed entities which have been doing well in last 1.5 years. I mean, every company which financially is not doing well is also doing well in these kinds of markets, as Vivek also pointed out. Vivek, if we talk about a sector which has just come out of its large, long lull, that is telecom space. I mean, with the kind of developments that we recently saw in the telecom space, would you be a buyer in companies like Reliance Industries, which has exposure to Reliance Jio, and Bharti Airtel, which is seeing a good momentum, or Vodafone Idea, which is now a bit relaxed after the recent developments and the announcements that government has made for this sector?
Well, so in terms of the three companies to participate, I mean, I have got labels for all three. So actually, the company which has come out of a long lull is only Airtel. For Vodafone, it is largely a hope trade. I'm using the word hope. You can highlight it, bold it, that it is hopefully going to be out of the woods, and all of it is dependent on two things: that they are able to raise funds, that it is got adequate liquidity because it seems to be having run out of money, and the tariff increases results in higher ARPUs, which makes Vodafone profitable. Because if the company is perennially going to lose money, then any amount of fundraising is not going to help, because even if they raise 25,000 crores now, in 1 year they would have lost that money, and they would have next year again they are back to where they are now. So Vodafone is largely a hope trade, and I don't think I'm so hopeful at this stage or at this point of time in trying to take a punt on Vodafone. In case of Vodafone, I would look at it. I mean, although I'm not an F&O trader, maybe it's more like a buying an option that either it's going to multiply or it's going to go to zero. One of the two is going to happen. Or in the near term, nothing will happen. It'll stay in a range. I mean, on the lower side, it goes to 8 rupees. On the higher side, it goes to 12 rupees, and that's about it. I mean, they're really I'm not in for that game kind of a thing. And Reliance, as far as the Jio piece is concerned, it's probably about 30% of the consolidated pre-tax profits. So in case of Reliance, it's evergreen. In case of Vodafone, it's a hope trade, and Airtel is the one which has come out of the lull after almost 12 years of either negative or zero returns, depending on where you have your starting point. So it was maybe 700 way back in 2007, and it's about 700 even now after 14 years. If you have your starting point as 2011 as 10 years ago, then okay, it's probably underperformed, given some returns, but yet underperformed rest of the market. But that's where the big game is as far as Airtel is concerned. I wouldn't be surprised if Airtel was trading at maybe in 4 digits, maybe it crosses 1,000 in the next 1 year or so.
Vishal, are you bullish on Bharti Airtel?
Yeah, definitely the chart pattern looks very bullish. The breakout was around 550. But since it is so much prone to so much of news and policy and all those things, I would say because we have such a wide variety of things to do in stock market right now, especially if you look at the IT stocks, which has now become the evergreen thing because everything is moving online, and I think the future is bright. So IT, then there's pharma, and then there is metal stocks which are there. So I would try to avoid telecom in my portfolio as of now.
Talking about IT, what do you like in IT, Infosys versus TCS?
I would like to go for the second tier IT stocks rather than the top ones. In terms of return, if I have to see, then I would like to go for something like a Mindtree, or I would like to go for Mastek at this price also, or I would like to go for there is NIIT. So those stocks in terms of percentage return would be higher than compared to Infosys or TCS.
Anything you like in the metal space?
Metal definitely will go with Jindal Steel. That's kind of my favorite stock, and it has performed well in the last 1 year. It has given a good correction also at this levels. So I think it is a good buy with 5 to 10% more on the downside, and can be a potential kind of Tata Steel for the next 1 year.
Vivek, if we talk about the portfolio mix right now in your portfolio, what is the mix like? What is the weightage of the different sectors that you're holding? And for the next 5 years, which are the sectors you think would be the star performers?
Okay, so in my portfolio mix, I have PSUs as the largest component, which largely is also a play on dividend yields, so the downside is limited. So also the portfolio mix has to be seen in context of rest of the market. So if I have got stocks which have dividend yield, probably the downside is limited, and that's where some of the railway companies like IRFC or RITES, RITES, right? And another one is SJVN. Bharat Petroleum as a play on privatization. So that's about, and of course the big daddy SBI. So these make up about 20-22%. I have metals, which is largely a Vedanta and Hindustan Copper. Of course, copper prices have corrected in the last few weeks, but I'm quite bullish on copper cycle in the longer term. So Vedanta plus Hindustan Copper takes care of most of the metal commodities in terms of zinc, silver, copper, crude, and iron ore. I mean, I have 5 commodities barring downstream steel. I have participation in most commodities were in these 2 companies. I am playing on demerger play with Gujarat Heavy Chemicals, which is one of my top mid caps in my portfolio, including the client portfolio. Company which probably will come out of a long-term lull as far as stock price is concerned, not necessarily financial performance, because financial performance continues to be impeccable, is Sun TV. I think the downside on Sun TV at about 500 is pretty limited, but upside could be pretty huge. A very strong, robust business generating some terrific cash flows year after year, and the debt-free, but surplus cash and bank balance is like more than 20% of market cap, which is very rare for a large-sized company. I mean, it's a 20,000 crore, almost a $3 billion market cap company, having these kind of matrices. As far as the consumer space is concerned, I have ITC and Marico, continue to like that. A small part in Dabur as well, continue to hold that. They've been holdings, no real need to reshuffle or tinker with that. So that's basically the kind of portfolio mix I have. Besides, of course, the known names in terms of Infosys, TCS as a representation from IT, and HDFC Bank, ICICI, and Kotak Bank from the banking sector. Of course, the SBI I'm classifying SBI in the PSU pack, which I just mentioned earlier, a few minutes. So this is largely the portfolio mix that I've got.
Very well diversified portfolio holding. Vishal, what do you like in the pharma space? That space has been consolidating a bit. I mean, last 6 months, we have not seen that kind of momentum that markets are viewing on the broader front. Anything you like in the pharma space and would recommend buying at current levels?
I like Dr. Reddy one at this level. It's like the previous breakout level, which was there since so many years, was around 4,500, 4,700, which crossed in the last year and went up to 55. It has come back to that level. So the previous resistance now works as support, and it is doing the job right now. So, and that's a very low risk trade for another target of 55 and 65 in the next couple of years. And I would also like the stock which is already moving up in one direction, which is DV's Lab. And with a tight stop loss, we can keep building positions. Looks like another big run is still will continue for the next 1 or 2 years at least.
Vivek, we had a rush of new, fresh retail investors coming into the market. What will your advice be to them? They want to make quick bucks in a very short period of time. What would you advise them?
Well, I wish anybody had a magic wand to make quick money in a very short time. Everybody aspires to do that. Everybody fantasizes to do that. Market does oblige sometimes in short periods of time, but with every correction. So there's a saying that with every correction, new investors learn the same old lessons. So I just hope that those lessons aren't too harsh for the new investors. When I say harsh, it should not be that they've come into the market and they should just exit the market, because that's typically what happens. Every bull market brings in a lot of retail investors, and a majority of them at the end of the bull market, when the coming bear market happens, I mean, majority exit the market. I just hope that the lessons are not so harsh for them that they don't come back. And of course, what is important is they need to have their stop losses and risk management in place. And most important is not get into leverage. I mean, any business related to leverage is absolutely hazardous to their financial health.
Thank you. Vishal, you're heading a training institute. You have your own training institute. What are you suggesting your new students who are coming to learn stock market trends, analysis, and getting into investing into stock markets?
So I give this example that if you are choosing stock market, you want to make money from it. It is like a profession, like any other profession. You become a doctor, lawyer, engineer, chartered accountant. You study for 2-3 years and then get into your own practice. So give some time to yourself. Either you learn the fundamental or you learn the technical, but give some time, master the skill. This is one skill which has upside. There's no upside cap on it. Huge potential. But if you have the skill, then only you can take advantage of it. So spend some time and then take. Market will go up, go down, go up again and again. So there will be enough opportunities, but just master the skill. And that's the advice we give our students, and start from zero level, start from basic. What is a stock? What is a trend? When to buy, when to sell, when to exit, how to manage your risk, how to divide your portfolio, and all that we just suggest and give them coaching on the right time.
I would love to know what is the kind of mindset this new generation is coming with, Vishal. Since you are teaching them, what is the mindset they have? I mean, when I speak to a few new freshers who have just joined and taken up a new job, I mean, they just want to get into markets any which ways and make money.
Yeah, so what we do is our training institute, where me and Meghna, my wife, are the key trainers. So I focus on the strategy part, where I teach them the technicals and entry and exit and all those things. Whereas she takes care of the mindset part. She's been coached. She's the high performance coach certified. So she works on their goals, their time management, their habits, their kind of belief system. See, if you have a belief system that stock market is risky, dangerous, gambling, and then you trade the market, it will turn out to be one. And if you trade it as a profession, like a systematic way to approach the market, then you will get the return. So first you have to do that brainwash of that earlier baggage which you have about markets and so-called people perception. You have to break that, change that, and then the same strategy will work for you.
Thank you, Vishal. Thank you, Vivek, for your time. It was
Thank you.
Thank you so much for having us.
Thank you.